I'm the Head of Global and Multi-Asset Investments at Harbour. I joined Harbour in 2018, but I've known the business for a lot longer. I joined Harbour from a large global investment consultant where I was for about 8 years before joining the firm. Harbour Asset Management, which is quite fitting for an asset management company, was actually born out of volatility. In the global financial crisis, a large global investment manager decided to pull out of the investment market. The founders of Harbour came out of that particular firm, were encouraged into business by two clients, and Harbour Asset Management was formed in 2009. Since then, we've been privileged to add a range of new clients. Today we manage money on behalf of 150 institutional clients. These range from sovereign wealth funds, community trusts, regional councils, financial advisors, and of course the GoalSgetter platform. Up until early 2024, we were owned by a cornerstone shareholder as well as senior staff, including myself and many other portfolio managers at Harbour. What happened in early 2024, we became part of a combined wealth and asset management group called FirstCape. FirstCape has a wealth management division and an asset management division. The asset management division is Harbour Asset Management. Look, still the same team, still the same people, and we're still really looking forward to continuing to deliver really good outcomes to our clients. On GoalSgetter, we've got two of our Harbour funds, the Harbour Sustainable Impact Fund, as well as the Harbour Active Growth Fund. So we're really fortunate at Harbour to have a really deep and experienced research team, many of whom have worked together for a time that actually predates the formation of Harbour in 2009. We've got 20 people on our investment research team. A good chunk of these are in our equities and fixed income team. These are people who are constantly looking at those markets, trying to identify active investment management opportunities. We've also got a specialist ESG team at Harbour. They're ensuring that everything the investment management team is doing, we're doing with not just returns in mind, but also the sustainability and repeatability of those returns. I lead the global and multi-asset team at Harbour of 5 people. So when investors invest in Harbour funds, they really are getting the benefit of that full 20-person team, as well as the expertise of the global asset managers like Rowe Price and PIMCO, who we partner with on many funds. Our investment philosophy at Harbour is really quite simple. We focus on the areas where we have expertise and knowledge. This spans domestic equities, domestic fixed interest, as well as asset allocation and manager selection. But you need more skills than that to successfully manage a globally diversified portfolio. So we pair the skills that we have with global experts for global asset classes. We're also always looking for opportunities. So over the past few years, as well as those global asset classes, we've started to introduce direct or private assets to clients' portfolios, again managed by specialists, in order to provide a real full service approach to clients. Our approach to responsible investing at Harbour has been something that's been really important to the firm since 2009. One of the first things that we did when we started as a business was sign up to become a signatory to the UN Principles of Responsible Investment. What we also did is created a corporate behaviour survey. We did this in 2010 and it covers the Australasian equity market. It was really quite unique at the time that we launched it, but since then we've been able to collate a lot of data around the performance of the companies in the survey that scored both high and low scores. What we've found is companies with a low corporate behaviour survey score, they tend to have more volatile outcomes than the top rated companies in our survey. So we think there's a really good case there to not just incorporate responsible investment on an ethics basis. Our research shows us that actually we believe we should incorporate it on a returns basis as well. Exclusions, look, they're also important. They're definitely not our first port of call, but we also accept there's some sectors where engagement won't work. Great example of that is the tobacco industry, which we decide to exclude, as well as other sectors. We do have within the Sustainable Impact Fund a far broader exclusions criteria, which reflects the goals of the fund being one that's looking to make a positive net impact on the world. I think two of the key challenges that face investors are around education and accessibility. Now, even as professional fund managers, we get overwhelmed sometimes with the amount of news and stories that are out there in markets, and a lot of the time it's hard to separate noise from signal or fact from fiction. Makes it really tough for a investor out there, looking to make really good choices around their investment. Something we try and do, and we do a lot of, is we make all of our research accessible on our website. We really try and write it in a way that is accessible, but also in a way that gives investors a really clear idea on where we sit on particular topics. I think the second point is accessibility. I think there's actually a positive story to tell here. If I look back 15 years ago, getting exposure to markets was really a folly of the rich. Today, there's great access to a wide range of investment solutions. I think that's got to continue evolving. I'm really proud at Harbour with the support that we look to provide to various charities. We've got a long-term charitable partner called Roots of Empathy, where we have a multi-year commitment to get their programs in schools. It's a charity that's very close to all of our hearts. It's one that we all researched as an investment team actually. We treated picking a charitable partner like we would selecting an investment. We did all of our research and we looked at where could our money go furthest, and that's where we chose Roots of Empathy. We also believe in being reactive to situations as they occur. We had a really good example of this during COVID when we heard of some of the challenges being faced by people in abusive relationships. I'm really proud that we had quite a significant 5-figure donation to the Women's Refuge during that time. We've done this in other areas too. When the cyclone hit Hawke's Bay, we had about a dozen team members head up to help with the cleanup. Although we're investment people, we're still okay with a shovel, trying to help people clear out their homes. So, great to have this long-term partnership with Roots of Empathy, but it's an evolving world out there, so we try and do what we can to help. So I think the three key things that we're really proud of at Harbour that are relevant to potential investors is first just the longevity of the investment team. It's a large team, 20 people based in New Zealand is quite rare for the New Zealand market. But within those teams, we have relationships that go back more than 2 decades in some cases. It's certainly been a firm where lots of people have joined, so our investment team has grown, but it's not an investment team that many people choose to leave. So we've traditionally had really low turnover. And that's great for our clients because many of us have been with us since inception, or even been with members of the team for even longer than that. The second thing is, we do live and breathe responsible investing at Harbour. You see that when you walk into our office and you're greeted by 5 different bins to ensure that we've got all the different types of recycling available. It's reflected in the way we conduct ourselves in market. It's also reflected, we believe, when you look through our portfolios. And the last point that I'd make is around track record. We know that in investing there's ups and downs. We've gone through them as much as anyone, but the key thing that matters to our investors is those 5-year, 10-year plus time horizons, and where we've had funds that have been around for that long, we're really proud with the outcomes that we've been able to generate for people. We're proud to be part of the Goals Getter KiwiSaver scheme. I think it's great that investors are offered choice. KiwiSaver has been around for a long while now, and as people build up those substantial balances, I think having a different mix of manager styles and philosophies really makes sense. Also really like it from the perspective of Harbour is traditionally mostly available to large institutional investors. We don't actually have our own KiwiSaver scheme, so having our funds accessible to investors who are KiwiSaver investors is really important to us as well.